All right, guys, we are back. My name is Karina Rodriguez with True Inmobiliaria. I am here with Jose Santoyo with CU SoCal. How are you?
Great. How are you?
And of course, Albert is here with us. How are you?
I'm doing well. Good morning.
Awesome. Okay, well, this is our second episode. We had so much fun on the first that we had to come back, guys.
If you can call that fun, yeah, sure.
Awesome. Okay, Jose. So today we'll be talking about FHA. They've made a few changes. I know they decreased the MI.
Yes.
So what does that mean for buyers? Let's go into the details and how it's going to be beneficial for the buyers today.
Great question. So, as far as FHA products, they have a private mortgage insurance, and so recently the FHA administration lowered it by about 30 basis points. So, in short, what that means is that members are able to purchase and actually save on their mortgage. So on average, we had a recent closing for an FHA product, and they were able to save close to $300 per month. So,
that's huge savings.
Yeah, in this particular story, the buyers purchased and closed at the end of January, and to our surprise, they retroactively allowed them to save the funds, even though the initial date actually took place after it began March 1st, I believe.
Oh,
March 1st, right?
Okay.
And so good news. I was able to relay the information over to our buyers to let them know that the very first mortgage, which they haven't made yet, was going to be reduced by about $287.
So that's actually...
And if I can say, that is how great the credit union is.
Oh, my gosh.
You purchase a home, you close on your loan, and then even before you make your first payment, the credit union comes back and goes, hey, FHA changed the rules. We're going to change your payment, and we're going to make it lower.
Nice.
Yes.
Unheard of. I mean, that's just amazing.
I mean, is that normal? Can other banks do that, or?
I don't know, and truthfully speaking, just because, as far as the credit union goes, I don't necessarily keep up with other lenders, but this is a very unique situation just in the fact that the information is so fresh. So
and she's in that period where, the first payment is pending.
Right.
So it's not like other mortgages.
No,
it's just that period. That
right, and then especially since the fact that we pre-qualified them and we got them approved on on the basis of a higher percentage amount, and so even though we knew the information was going to be changing, we obviously you never know for that specific date, so we just underwrote it to to the original, and so to our surprise, it was lowered by 30 basis points. So that's good. It's always great, being able to call the member and say, hey, guess what? I have good news.
Right.
So that was fun.
That's awesome. I think it's important for them to know why they have to pay this MI. So do you want to go into why they have to pay mortgage insurance?
So traditionally, when buyers are placing any down payment less than 20%, they're basically, it's their skin in the game, right? Mm-hmm. So anytime you meet 20%, so if you're buying a property of say $700,000 and you put $140,000, you're basically self-insuring yourself. So that just means to the lender that you're going to take on a bigger responsibility. Mm-hmm. And so anyone that can purchase, or rephrase that, you're not required to put 20% down. So I would say, yesteryear is when it was required. And then so moving forward, lenders have made it easier for buyers to get into homes. So at this moment, with a conventional loan, you can come in with as low as 3% down, 5% down on a conventional standard loan. FHA products allow you to come in with 3.5% down. So whenever you put less than 20% down, the lender requires for the payment to be insured. So just in case of a potential loss, and so that since the crash of the market for the most part has been at a higher rate. So anyone that's gotten an FHA product over the last 10 plus years have been paying a higher rate. Right. So this is huge news, especially since we have a lot of buyers out there that are falling into the FHA realm. So a lot of them are on the fence, and this allows them to, come in with a little bit more of a peace of mind, knowing that their payment is going to be lower. So that's huge.
Right.
Yeah. So right now, FHA we are seeing a lot more buyers in the FHA realm. So that just means that members are coming in with less down, not necessarily with 5% down, but about 3.5% down. So which is great news overall.
Yeah.
And it's making a lot of our clients feel more comfortable with the prices that of houses today because
Yes.
that payment drop of $200 to $300 that we're seeing makes it that much more easier and comfortable for them to jump into that purchase.
Yes.
Yeah, I've seen that quite a bit since we have a couple buyers that are pre-approved at the moment that Albert and his team has been working with. And so, I mean, as far as, they're active, but we're not seeing so many contracts, I would say. And the biggest challenge has been the monthly payment. And, when I have the conversations with buyers, the biggest concern is the monthly payment. And as we all know, rates have not been going down recently. So with the PMI reduction, that made it a huge improvement.
Yes.
Especially in the a person's ability to be able to purchase,
Right.
and feel comfortable with the payment.
Yes, I agree. And as far as FHA financing, we're speaking about rates.
Right.
So is it different compared to a regular conventional?
Yes,
Okay.
yes. So it's actually quite a difference. I was doing some pricing yesterday on some purchases, and my average rate was about 6%. To whereas a conventional we're talking about 30-year fixed here. On a 30-year fix, the average interest rate on a conventional loan was over 7%. So I mean, we're talking about a full percent, and we're talking about a monthly payment. That's going to be huge.
Right.
So when you add that on top of making it more competitive with the lower PMI, I mean, it's just
Yeah.
It sounds like it's a no-brainer to go FHA right now.
Right.
exactly yes, for the most part. Of course, if a buyer has more than the minimum to put down, then absolutely you'll want to go for a traditional conventional. We can look at additional options from there. But yes, if you're comparing a conventional loan, 3% or 5% down versus FHA just based off of pricing and payment, it's going to be your better bet
Exactly.
at this particular moment.
Right. And so, speaking of mortgage insurance, does that get removed at a certain period of time, or can you go into that?
Sure. Well, it depends on the product. So FHA is considered to be on the life of the loan. So usually how buyers will be able to remove the PMI is later on down the future is to do a complete refinance.
Right.
At that point, once you gain the equity or interest rates are lower, you can refinance and get into a traditional conventional.
Right.
So that would be the easiest and most quickest way to remove PMI.
Yeah.
So it sounds like there's always something for something.
Right.
You can get a lower rate with the FHA right now, but
Yes.
then you have to endure the PMI for the life of the loan.
Right.
Yes, but as we all know, how many people stay in their mortgage for 30
Exactly.
years?
That's what I was going to say. I'm
Exactly.
sure
Yeah.
Albert can agree that majority of our clients, they start with FHA,
Right.
and first home, buy their condo, and then once they're ready to move up, they go into a conventional.
Right.
So,
Yeah, the statistic shows that most first-time home buyers don't really live in their first home more than about 7 to 10 year average.
yeah.
Yeah, and then as we all saw, when after the housing crash, when homes were and post crash, everyone again was opting for FHA. They were making it where they had programs out there that made it easier for people to get into these homes, and then so started this refinance boom. So if you've been in the industry for more than 15 years, we've all experienced this before.
Right.
So it's nothing new. I think just it's a bit of a reminder that how interest rates can affect a monthly payment.
Right.
But again, we have the tools, we know the know-how, we've been through this before to help educate our buyers.
Yes. Would you say majority of your applications right now are kind of shooting directly to FHA? What are you seeing?
Right now, I have it's a toss. It's a mixed bag. So it really just depends.
Do you want to kind of go over a scenario? Did you guys recently?
Sure. Well, I have a couple. I mean, I have a ton.
Yeah.
So the good news.
I have a ton. That's a good problem.
Yeah. And it is. But that
Forget.
just yes. No. It is. And that it's actually great news because we still have a lot of buyers interested. Okay. And then so again, the very first thing anyone that is thinking about looking into a home is contact myself, someone like myself, a lender, to kind of figure out the nuts and bolts of the details of the payment. Now, in terms of what the approvals have been coming in at, majority right now have been FHA. But again, I do have buyers that have been saving up for quite some time. And I think some individuals that have been on the sideline that have been trying to time the market are realizing that that's probably not going to happen. So they're looking at their options. Even though they might not necessarily buy, they're coming out of the woodwork right now. So I have individuals that have like well over 150,000 saved up. And, and then they're honest. They say, I don't know if I'm going to buy today, but I just want to know kind of what it looks like. And that's at the very least, we are recommending for you to do that, because they thought that the market would have crashed by now.
We're still not there.
We're not there now. And that's a whole different, can of worms there. But yes.
But that's part of the process that we do nowadays is that when someone comes over and starts thinking about buying a home, the least that you can do is talk about all the different products and allow them to choose or explore which ones is going to be the best. FHA for some time was like a non-starter conversation for a lot of people. There was just no need to go there because the particulars of the FHA were just really that more expensive than a conventional. But nowadays that seems to kind of flip, at least for the moment. So it's our responsibility as a fiduciary duty to you is to allow you to learn about all the different programs, and then you tell us which one works well for you.
Yeah, and I think too, if I recall correctly, a lot of the offers that were being made were, that FHA was like non-conversation starter.
Yes.
Since a lot of people were coming in cash heavy.
It didn't matter if you qualified for, $600,000, and if you were FHA, your offer was not really going to the top of the list because conventional was being preferred over and over.
And do you want to go into why it was getting preferred?
No, that's a whole other topic.
Because it's a whole different side of this, advantage right now.
Exactly.
But then with anything, there's always,
but
little something for nothing type of thing.
Right, yeah.
Right, but to be honestly speaking, FHA was kind of looked upon
because they're lower down payment,
lower qualification, but that's not necessarily the truth. The thing that we did to overcome that stigma in the marketplace to a certain extent was we always told the listing agents that this was not a reflection of our clients' financial capabilities. FHA is just another loan option. It doesn't mean that they're lesser quality or that their FICO is necessarily lower. It's just another loan option that's currently in the marketplace.
And so when we have a flood of offers, right, that come in with 20, 15, 20, 30% down versus a couple trickling in. I've seen the marketplace where homes are being listed for a lot longer than 30 days. So as a buyer, or as a seller, I would be enticed to give that a greater consideration at this moment. So again, like Albert said, the stigma was there regarding FHA products for whatever reason that they deemed right or rightfully so. But at that point, that's no longer existent. So which is, and again, I don't even know why we've been having this conversation, but that's just goes to show how
it's the reality of the marketplace.
It is the reality of the market, and also how the marketplace just tends to shift. Depending on, and at this moment,
where we're at.
Exactly, it's heavily weighed on rates. So again, having that conversation, it's just like, well, why is your buyer going with an FHA product? Well, interest rates are a lot higher. Or excuse me. Interest rates are a lot higher, whereas my FHA product happens to have a lower rate. So it financially makes more sense.
Yeah, definitely. I know there's also upfront FHA.
Private mortgage insurance.
Upfront
premiums.
So do you want to talk about that?
No, just kidding. No.
Since we're in the topic, I feel like it's,
Yeah, so we can build it out. So one of the things that to get into an FHA product, you will have to pay upfront private mortgage insurance. Thankfully, you are
That's
able...
in addition to what they pay monthly.
To the monthly, correct.
Right.
Yeah, so it's like you're buying.
Yes.
Right? You're buying. It's like your insurance you're paying upfront. Right now, it's at the tune of about 1.5% upfront.
Of the loan amount.
Of the loan amount,
yes.
Correct. Yes. So it's not cheap by any means, but the good thing is that you're able to finance the private mortgage insurance.
Nice. So it gets bundled in part of your loan.
Part of your closing costs, right?
Closing costs.
Part of your closing costs,
okay.
Right? So again, your options. Do you go with an FHA product and pay that premium up front? You look at the details. You don't have to finance the upfront private mortgage insurance, or do you go with the traditional conventional loan where your interest rate might be a little bit higher and not have to pay that PMI. So that's kind of like your options. You have to weigh out what the costs and benefits are.
Right. Right.
But a good lender will provide those details for you to decide.
Right.
And then if you want to really throw in a wrench, you can just bring up adjustable rate mortgages and
we'll talk about those later too.
We'll talk about them later. Yeah. So, but again, looking at the options that an individual has, if what's so funny, I was having a conversation the other day with the individual who was checking in on interest rates, and they were like, "Hey, this is my purchase. This is what I'm looking to get. What are your rates?" And then so one of the first things I asked is, have you been already pre-approved? They say, yeah, absolutely. Great. Do you know what your conditions are? As far as like what how much you qualify for, or what your interest rate is, and they had absolutely no idea.
Oh wow!
Right.
Yeah.
And so I said, okay, well, let me go ahead and take an application and figure those details out. And I kind of checked back in on them, and I said, do you not absolutely know anything of your approval? And then, so then I started thinking, I don't even know if you're even pre-approved, but they were adamant that they had a pre-approval letter. And I said, great, send it over. Very generic.
Okay.
Very generic. And then so, that just goes to show that, hey, there's still a lot of lenders out there, giving these, these cookie cutter pre-approvals out there without really doing their fiduciary duty.
Right.
And then, they may have, but as far as like for the individual not to know exactly what the terms are, that's a little scary.
They weren't educated.
They were not educated.
They're just like, okay, here's my paperwork and let us know what we can qualify for. But maybe this person probably didn't really
because
find out.
Like Albert was saying, a lot of buyers, are rate and payment sensitive, and then so you do all. Imagine you're a realtor, you do all this work, and then you're showing them properties, and then you're great. You get an offer, go back to your lender, get the payment, and then I go, I can't afford this. Then that just wasted everyone's time.
And we hate surprises, so
I like surprises, but not those type of not the type
surprises.
The good surprises, not the type that cancel out. But thankfully, knock on wood, we haven't had any of those. Just because, again, it goes back to the basic foundation of why we do what we do is providing them the education that they need.
Exactly. No, I really like that they're switching things up and trying to make housing affordable for buyers.
Yes.
I think that, correct me if I'm wrong, the last time that they changed it was 2015. So it's been quite some time, right?
And for FHA?
For FHA, yeah.
I believe so, yes.
Do you think it's going to stick around to where something that this is temporarily, or what do you think?
Again, it's just one of those things.
Yeah.
Is there's a lot more forces than just
right.
than what's at from what we can see. But it's a good thing, so we're celebrating it for sure.
Take advantage while it's here, guys.
Yes, I'm not trying to get into the weeds as far as like the I want to know exactly why. I'm just if it's a benefit for my borrower, then let's run with it.
Yeah.
It's a win-win right now.
Yeah.
And it is motivating people to get back into the market.
No, really, yeah.
We have another client that we're working with, and she is adamant about taking advantage of what the FHA change is, and she wants to apply it now.
Yeah.
So she's hot. She's like, I want to get a property today because I don't want to let this pass up, because $200 to $300 is significant enough.
Yeah, and then that's a good point too. As a good lender, we're revisiting everyone who was on the fence, and they were kind of like, I don't know if I want it right now. Just to have that conversation. Hey, by the way, did you know?
Yeah.
And so usually that just sparks a conversation, and then go from there.
Yeah.
So the least we can do is just make sure that they're informed.
Exactly.
So that's good stuff.
Yeah, no, that's exciting news. I'm glad that things are happening, and hopefully the market will pick up for our buyers, and we can contact those people that were in the fence, like you said, that there's just no way that they can qualify, and then just bring them back and let them know that homeownership is attainable, and they can do it any day, today, in 6 months, in a year, whatever. But no, it's exciting.
Yeah, don't time the market.
Yes.
So that I think that's a good.
I think they're it takes everyone time
Right.
to find out whether it's something that they're going to be, pursuing, or even if they feel ready for, So I think it takes a while for them to kind of.
Right.
But once they see these opportunities, I think it'll be a great push for them to.
Agree. And we're here to service them.
Right.
Yeah.
And provide them with the best information that we can.
Yes.
That's exactly it.
Exactly. Well, thank you guys so much.
No,
This
thank
is a
you.
great topic,
Yeah, fun.
and we'll see what else happens, and of course, we'll be here to inform everyone else with any
Yes.
new changes.
All right, great.
Excellent.
Thank you.
Awesome.
Thanks,
Thank you
Karina.
guys.
All right.
Yeah.
Bye.